Hey everyone, welcome back. Today I'm going to talk Tenet Fintech again. I'm going to talk about Cubelor, the impairment charge, and the $48 million loss that they incurred last year. So let's start with Cubelor. Why did they purchase this and what was the price they paid? So October 1st last year, Tenet Fintech acquired Cubelor Inc. Is the development owner of technology that powers Peaks, or Tenet's business hub. It acquired 100% of Cubelor's issued and outstanding shares from Cubelor shareholders in exchange for $1 million in cash and just over 11 million in common shares of Tenet at an average share price of $9.58. So why? With the acquisition of Cubelor, Tenet now owns the worldwide commercial rights to the business hub concept, which the company is looking forward to expanding beyond China's borders, beginning with a hub in Canada planned for later this year. We couldn't be more excited about getting this transaction closed and be finally able to launch our operations here in our own backyard. One thing to know about Cubelor, there was a software and licensing agreement between Tenet and Cubelor, exclusive for Tenet to use in mainland China for a period of 10 years starting in 2017. As well, JJ Golden and others in the Tenet organization owned approximately 40% of Cubelor prior to the acquisition. So the companies were well intertwined before this deal. So why did they make the deal? Why was this so important? It was considered a de-risking event for the company overall, as they now own the technology behind the business hub. Plus, as the agreement was only for China's operations, to go international with it, and they needed to own Cubelor as a whole, right? And then they could launch the Canadian hub, the US hub, and get all those linked together. Because of that 40% ownership that Tenet shared with Cubelor, they had to go with third party, review the tech, and come up with a fair value to Tenet shareholders. For this, they only used the potential business in Canada and the US, and they came up with a fair value of 107.6 million. So what is an impairment charge? I should now mention that I'm not an accountant, and this is the best I can explain through my research. Basically, IFRS accounting standards that Tenet follows requires an impairment test for goodwill on an annual basis. Well, when Cubelor was acquired, they had to put on the books as a goodwill asset. The core principle in IAS 36, part of this accounting standard, is an asset must not be carried in the financial statements at more than the highest amount to be recovered through its use or sale. If the carrying amount exceeds the recoverable amount, the asset is described as impaired. So in the case of Tenet, Cubelor was two things. It was considered one, an intangible asset not yet available for use, and two, it was also considered goodwill acquired in a business combination. So the test is definitely required. They then performed a check to see the two different values, and then they get to use the higher value. Well, one, what is the fair value less cost to sell? And the second is its value in use. So Tenet basically uses the second, which is value in use. It's calculated based on the expected future cash flows in the asset and discounted back to a present value using the appropriate discount rate. So that kind of brings us back to a statement that they placed in their MD&A. So here, a periodic evaluation of the intangible assets and goodwill of Cubelor and Heartbeat resulted in an impairment of 41 million for the goodwill and almost 12 million for other intangible assets in 2021. The delay in the launch of the Tenet's Canadian operations had caused the company's forecasted North American revenue for 2022 and beyond to have shifted by almost a full year, resulting in lower recoverable amount than the carrying value of the intangible assets and goodwill related to the Cubelor platform as previously forecasted. So this impairment of goodwill, an impairment charge, while they wrote at the top of this Cubelor and Heartbeat, it consisted mainly of Cubelor. There's I think about a couple $100,000 for impairment of goodwill built into Heartbeat, but this was mostly Cubelor. So why the impairment charge? So why did they lose the value? Well, the same thing basically just happened with Livongo and Teladoc, except Teladoc took a massive $6 billion charge. And why? Well, quick and dirty is Teladoc overpaid for Livongo's tech. So why does this happen to Tenet? Well, effectively for this happened to Tenet would have had to overpay for Cubelor, at least on paper. So here's a bit of a hot take, and some might disagree with me now, but so now that we know they're delaying the launch a full year in Canada, this is why they booked such a large impairment charge. They essentially purchased a product at a ready or almost ready to market price, when in fact it wasn't. Management explained this, however, that change in strategy, where instead of launching a Canadian hub only, they wanted a more complete global offering. But I do speculate that the Canadian hub Cubelor was working on when purchased was not as ready as it should have been to launch in Canada this year. So part of the decision was probably made for them when they decided to do this. But here's the good news. It was a 99% stock deal, and we are currently trading at 1/5 the price we were when the deal was made. If the same deal was made today, they would have needed to issue 5 times as many shares as they did at that price. So 11 million shares, in my opinion, is still a cheap price to own the technology behind the business hub and to be able to expand to North America and internationally. So right at this level, 958. So anytime below in this area, which is over the last 7 months, if any of those shares were sold, we got a deal. So to continue as stated by the company, for the date of the acquisition, it was determined that Cubelor contributed nothing to revenue over 54 million in loss before tax. That 54 million loss is completely due to impairment of goodwill and the impairment charge. This includes impairment of goodwill of Cubelor's 41.17 million and the impairment of tangible assets of almost 12 million. An impairment loss for goodwill is never reversed. For the other assets, when the circumstances that cause the impairment loss are favorably resolved, the impairment loss is reversed immediately in profit or loss. So the goodwill charge of 41 million cannot be recovered on the books. However, the intangible assets value of 12 million can. So essentially that goodwill number, unless Tenet makes other acquisitions in the future, can never go above and beyond the 62 million. However, the intangible value can increase. So what's the problem with an impairment charge? So taking a hit to goodwill of that size drastically reduces shareholder equity. Basically, we've got 62 million in shareholder equity currently, 62 million in goodwill currently. If we didn't take that charge, we'd have 103 in goodwill plus 43 million in tangible assets, right? Essentially adding back on that 54 million in assets, and thus shareholder equity. So currently, after all this happened, we have 195 million in assets. So almost half of that, however, is goodwill and intangible assets. So future impairments would significantly affect our total shareholder equity that we have with Tenet. So what can we expect for 2022? Well, since Tenet's carrying a goodwill on the balance sheet, they'll have to perform another impairment test at the end of the year. However, it'll be very difficult for us to determine if that would be significant or not once the test is conducted, as its value could still be close to the current goodwill and tangible assets, or intangible assets could even increase. So as part of giving a guesstimation, we're just going to have to let it all play out and see where we end up at the end of the year. However, one negative force this year will be as bond yields rise, discount rates will need to increase as well when calculating discounted cash flows. This will work against them because bond yield rates have been steadily rising, and whatever figures they end up using, they'll get audited against. So they can't just go ahead and use the same number they did last year. I'll stop this video here with one final comment. I think at the current share price, Tenet's market cap is below its total shareholder equity value or its book value. So I would call this deep value territory. If you believe as I do, the company is going to continue to thrive and rapidly grow its revenues and margins for years to come. This is a special opportunity in the small cap market. So thanks for listening to this video. Appreciate you guys taking the time. Please like and subscribe if you enjoyed it, and if you want me to see me do more of these in-depths into Tenet. Have a good day.